Welcome, everybody. My name is Chip Dodd with the EO chapter of Southeastern Virginia here in Virginia Beach. We are excited to be doing this webinar series, helping entrepreneurs learn how to navigate the complexities of the PPP loan and the changes that just occurred, got signed into law extending that period. Barry Dorans is an attorney from Wolcott Rivers Gates, who's a strategic alliance partner of our EO chapter. He is an expert in all things labor law and PPP, and he has agreed to, he basically reads all of the fine print and he captures it into a summary for this webinar to help us navigate the complexity of the PPP, the complexity of the forgiveness, and all of the math necessary to make sure that we do things properly and don't misuse the money. So he's been working with my company for years, navigating the complexities of labor law and everything from how to do compensation, how to make sure we pay the right overtime, all of those type of things. And he's been a blessing to my company and keep me on the straight and narrow. He also is really good at helping employers try to figure out how to strategically operate their business in conjunction with their employees so that you can achieve the goals that you've laid out. So without further ado, let me go ahead and jump into this. I'm really excited. Barry Dorans is an amazing guy to take the time to teach us PPP. So Barry, thank you so much for joining us today.
Hey, Chip, let me start by thanking you for all the hard work you do behind the scenes to make it work, and for EO for all the great things it does as an organization. I want to thank the people that are joining today. I know your time is very precious, so we're going to try to go through this as briefly as we can. And I'm going to start by making this go. I'm not going to go into any of my background other than to tell you the most important thing you need to know is that my mother is the most optimistic person I've ever met in my life. She can find the silver lining in anything. And I inherited a little bit of that. And so that today we're going to talk about how are we going to be able to use that PPP loan to make your business better. Again, to me, you not just want to survive this, you want to get better. And as I've talked about in this slide, in 9/11, we had some real disruption. 2008, we had some real disruption. We certainly have disruption now, but some businesses are going to come out of this better than before. Hopefully yours. The overall goal is still going to be the same thing as we talked about last time. Focus first on your business. Try not to adapt everything to the PPP because the rules change. We saw they changed after the first time we did it. They changed again. They've changed yet again. They will change again between now and 24 weeks from now. I can basically guarantee that.
So
Barry, let's look at, go ahead.
Let me stop you there. I think we were going to do a poll question on that first slide. If you can back up one slide.
No, I think it's 2 more slides, Chip.
Is it? Okay, sorry.
Yep.
I actually made that one of the poll questions.
Okay.
You can keep going.
Oh, do you want to make that poll question? Go ahead.
If we want. Okay.
Sure,
So one of the things we talked about in prepping for this is we wanted to get some reactions from our attendees so that we could figure out kind of where you are in regards to PPP. So here's the first poll. Hopefully it just popped up on your screen. I'd really appreciate it if everybody in the next 15 seconds can pick one of these 4 things. Which of these outcomes is affecting your industry or your business if it is, but sometimes it's an industry. But what do you think is going to happen because of this pandemic, this thing? It's good. We're getting some responses. As soon as I give it another 10 or 15 seconds, and then we'll show you the results. Nice. So far, we got a clear winner. It's still growing. Let's see here. Looks like there's about 4 more people that need to vote if they would like to vote. Down to 3 more people. All right. I guess everybody that wanted to vote voted. So let's go ahead and end polling, and I'm going to share the results. So Barry, are you able to see that on your screen?
I can see it. Looks perfect. So again, my mother is being vindicated. We're going to eventually rebound in full for more than half the audience. Fantastic.
Yep.
Great thing.
All right.
I'm going to track on to the next. As we talked about, focus on your business. This is a slide I had last time. Again, same thing. If you get the loan and you don't get the forgiveness, you still get a loan that's at 1% with a 2-year amortization. The payments are deferred until your forgiveness is determined. So to me, that's still a great thing. I was out actually at a restaurant. We had chocolate cake. It didn't have the brownies with the ice cream, but the chocolate cake was still very, very good. And to me, it's the same thing here. If I can get that loan and it's 2%, excuse me, 1% over 2 years, that's still a great thing, even if I don't get forgiveness. So there are 4 or 5 different possibilities, and this is, Chip, we're going to do another count here. And you've heard things about curves, and I want you to be talking about your business, what you think is going to happen. Some are A, basically unaffected by the, in terms of head count, by this. I'm thinking of the Home Depots, the Lowe's, the supermarkets. Their head count never dropped. V-shaped, those are ones that went straight back down, came straight back up. Go to the next slide. Kind of an L shape where you came out and you've come down and you haven't been able to come back up. And U-shaped is where, as you can see, it's going to be a real gradual, but you think eventually you're going to get back up to where you started. So if we can do a poll question A through D.
I'm on it. Okay, there's the poll. So please select which one your company has done, A through D, or which one's most closest representative, because obviously all scenarios weren't there.
I see we can't vote, Chip, but
I don't think we can vote, no.
you can. I tried to. It said no.
Tried. I, as you know, am the perfect L shape. The bottom dropped out from under us on one service and just a little bit on the other services. And we have been busting our tails to try to hire people. And we cannot hire people. I mean, it was like, we got Lynchburg and Danville and Virginia Beach. We're throwing money at LinkedIn. Not LinkedIn, Indeed, Facebook, everything. We can't get people to come to work. So let me see here. So if everybody can vote in the next, let's say 5 to 10 seconds, we'll go ahead and close the polling and show you guys the results, which are surprising. I don't know if you see the polling, but
I don't see the polling.
This is really interesting. Okay, let's go ahead and end polling and check this out. No effect, flat. This virus has not affected us on average on this call. That's amazing to me.
Actually, that's going to be very interesting because we're going to talk about, for those people, what they're going to do, and we'll talk about this in a minute about the 24 versus 8. They may be just saying, I'm going to stay in the 8. For the V people, the L people, and the the B, C, and D, which is V-shaped, L-shaped, U-shaped, you are definitely going to be looking at the 24 weeks, because that's really going to make a big change in what you get in terms of forgiveness for the loan. Yep.
Wow. I would have never guessed that 57% of the people on this call had no effect from coronavirus. I would have bet money against that.
So this is the last poll, I promise, but where you're here, we want to get your information because we're learning as well. If you had trouble restoring your FTE count, why was that? Is unemployment pay too high? Is it the COVID restrictions are preventing you from putting more people to work? Or is it the lack of demand that's preventing you to put more people to work? Or other, if there's another.
All right, I just launched the poll.
So we've heard some debate in the federal legislature. Some people are saying, look, the unemployment pay should be extended, that $600 supplement. Others are saying they shouldn't, and you're hearing that go back and forth and back and forth. And there's really, I think, a great lack of hard data for anybody to know whether, in fact, that is causing a problem getting people rehired. I know, Chip, I think you feel that way. I've had some other clients say the same thing. And I was telling Chip this, that one of my clients said he's interviewed a number of people, not rehiring, but people he'd like to hire. And they said, yes, I'd love to start August 1st. Not till then.
Right.
Which is just stunning to me. But
right. Well, also, as we know, that additional $600 a week ended up being, I think it ends up being $15 an hour or so in addition to the unemployment. So any of us on this call that have workers that made 15 or less, those workers are incentivized not to come back to work until this 600 dries up. But
yeah, it's somewhere around 50,000 a year.
Yeah, amazing. God, okay. So it looks like everybody is done polling. That's going to do it. So, oh wait, a couple other just jumped in. So 5 more seconds. If you want to vote on this, I'm going to show you the results. So I think we're up to a total of 16 that voted on this one. Okay, let's end it. Here we are.
I don't see it.
Oh, you don't? Oh, I'm sorry. Share results. There we go.
There we go. Wow. Okay. So here's an interesting breakdown. We're seeing about 40% saying they're having that issue that you are, is that we can't bring back people because of the unemployment pay is too high. So for those businesses, the good news is currently that's going to expire July 31st. So hopefully in August, those of us who had that headcount reduction will be able to bring that back up. COVID restrictions, only a few people. And again, I think we're seeing that ease, and we would think by the end of July, that should hopefully be done. Lack of demand's a tougher one. I was at a restaurant today, and as they said the same thing, we're just, it's very, very slow to come on back. People are still reluctant to go out in the public. So we're going to go through our next slide. So I do want to make sure everybody keeps this in mind, allowable use. So the loan is allowed to be used for certain things. If you use it for allowable use, great. If you don't, you can get into some trouble. Those allowable uses include payroll costs, vacation, healthcare benefits, retirement benefits, taxes, etc., interest on mortgage obligations, rent under leases, copier leases, utilities, and interest on any other debts. Now again, an allowable use for us means February 15th, 2020 through December 31st, 2020. So that's a fairly long period of time. I think you'd be hard pressed not being able to spend it all on an allowable use. If you don't spend on allowable use, it's a 1% interest. We defer payments until the forgiveness amount is determined. That's a change from the first time we did our presentation. The repayments over 2 years, and there may be some confusion about that. The statute's been amended to say there's a 5-year minimum amortization, but that's only on loans that got issued after June 2nd. You are allowed to go back to your lender and ask them if they'll give you the same treatment, but they're not required to. So there have been some things arisen about this. The SBA has said that they will audit any loan for more than $2 million, but they reserve the right to audit any loan at all, even those under $2 million. If they audit you and find out you shouldn't have gotten the money, you have to repay it, but you won't get the 1%, you won't get the 2 years. The two other big issues are you could be criminally prosecuted. And if you remember, the SBA was threatening that for anybody that borrowed the money that didn't need it, so to speak. I don't know how you could not need it. Also, there's a False Claims Act where individuals can bring a claim. Any employee or any whistleblower can bring a claim against you, asking for triple damages if you either spend it on a non-allowable use or you borrowed it and didn't need it. Now, I'll say this. They've already brought a couple of these actions. Somebody went out and leased a Rolls Royce with the money. And it's like, no, dude, that's not. He bought a diamond ring for his girlfriend and then got a Rolls Royce. Oh, and he paid some child support. And it's like, no, you can't. Those are not allowable uses. No. So Chip, you and I have talked about this. Did you open a separate bank account?
Absolutely, and I feel so much better that I did so. And I actually have 2 bank accounts. I have the money where it went in, and then each time there's an allowable expense, I move it to another account. So it's clearly accounted. It's only payroll. It's only rent. I am never going to put that in my general fund and let it slosh around. And then if I need it, I would only pull it from the account in which I put it. I don't know. So I probably went overboard. I'm not sure how other people feel about that. But
I wouldn't say overboard. And actually what I think's worked out well, a lot of people did this, is that some of them had to put the money back in. And I think that should be, actually we'll go back. Our next slide is that you could either use the 8 weeks or the 24 weeks. So some of the people saying, well, I got to spend all this money now, and started spending the money. Well, now the forgiveness period is 24 months. They may want to push that money back into that account and say, no, I want to recategorize how I spend it. Whereas before they may have said, look, I'm never going to hit that payroll number. I'll spend it on allowable use. But they may want to say, no, I want to reimburse that account. Then I'll continue to spend it on payroll and turn it into a forgiveness use.
Right. So one quick question
sure.
that just popped into my head. So because the period for forgiveness got extended, the majority of us that have payroll are going to be able to use the money for payroll and rent, right? We're not going to have that problem that we thought about before where I may have this leftover amount that I wasn't able to spend. So I guess for us that right now are on 2-year terms and we think we're going to get forgiven, there's no use in going to the bank and asking for different terms, 5 years. But after the forgiveness has been determined, let's say half was forgiven and the other half was not, at that point, it's never too late. You can still ask the bank for new terms.
You certainly could.
Okay.
But this is an important distinction that you knew and a lot of people didn't. The SBA did not loan this money. The bank did. It's the bank's money. So the bank's the one that has the full right to say, no, look, I'm not going to let you borrow for 5 years at 1%.
Gotcha.
So we went over this before. This really hasn't changed. The forgiveness calculation is still going to be the same thing. We take A, B, C, and D, add them all up. That's that total amount. We're going to multiply that by a percentage reduction in FTE, and that's something that is going to be at least of importance for about half of our people on today. Then we subtract from that a reduction in pay, and that tells us what our forgiveness is. So
Reduction of pay is the 25%. Meaning if you had whatever, for round numbers, $100,000 employee, and you took away 30,000 off the top and said everybody that made 100 now makes 70, that's considered a reduction in pay.
Correct. Yeah, the cap is the 100. So an easier one, if I had a 50,000 employee and more than the 25.
Yep.
That would be a reduction of 25, and that'd be a reduction in pay, and that's done dollar for dollar. They track it through, and that's going to be a reduction by the person.
Okay.
So loan forgiveness, again, is each of these things, A, B, C, D. And then here's the part that's really got me kind of frustrated. So the last thing, which is in purple, it must exceed or equal 60% of the loan amount. And I put a maybe there because that is exactly what the statute said. That's what the cliff was about. Several senators came out and said, look, we don't want to support this amendment because there's a cliff that if you use less than 60%, you get no forgiveness. And that is exactly what the statute says. However, the SBA has come out and said, yeah, we're not going to interpret that way. We're going to ignore it. We'll treat it a totally different way. So you're sitting there saying, what are you doing? Let's look a little bit about payroll, because then this part can get a little bit confusing. So payroll must be incurred and paid during whatever the period you're using, either the 8 weeks or the 24 weeks. So, and I've given you two examples here. One is you get the money on April 20th, you pay payroll on April 30th. So that's for the period of the 13th through the 26th. You could then say, well, look, it was the 20th when I get the money. I'll count the 20th through the 26th because that was earned during that period and paid during my 8 weeks, and then continue on and continue on and continue on until the very last period, in which case I can extend back to the next payroll period. Or, and to me, what I think most people would do is just go payroll by payroll. I think the math's going to be easier. You don't have to cut it up twice and deal with things going back and forth. And again, now you have the option of 8 weeks or 24 weeks. To me, you might want to use that 8 weeks if you're like, what about half our callers who didn't have a real problem with a FTE count? Well, if they've met the FTE count, they spent all the money, they're going to get 100% forgiveness, I'd go ahead and do it. My concern is, and I agree it's not a major concern, but it's a possibility. What if we have a second wave in Virginia and you start losing that head count? Well, that would then give you a problem. You have to come back and try to rehire people and do sorts of stuff. So my suggestion to people is I would wait after the 8 weeks, at week 9 or so, run the math, have your accountant run the math, have your bookkeeper run the math, and figure out where do you sit. And if you sit at 100% forgiveness, why not? I would point out in C that there was a cap on owner pay at 15.38% or $15,385. That's likely to go up to 43% of the 2019 compensation, or whatever the math is to move that number up.
That makes complete sense. Because
we haven't seen it yet, but that's what we expect will happen.
Yeah, basically it's the same ratio, just for the longer period.
Longer period of time.
That makes sense. So we did have a question come up, and I was holding off until we got to talking about owner compensation.
Fantastic.
And the question is, we're a restaurant that is maintained open for takeout, curbside pickup. We just gave bonuses to employees that stayed with us through the COVID issues. Can we as owners take a bonus as well, and these bonuses be forgiven as part of the PPP?
So the answer is probably not. So they're going to be capped at their 2019 compensation. Now, if it goes through the 46.15, then you'll be able to pay yourself that much that you did of 2019, not any higher. So that's going to be the issue. So
maybe in some situations, the owner said, well, I used to make X. We can't afford that anymore because of this thing. So I'm going to pay myself less. In that situation, as long as it doesn't exceed this number, then the bonus is okay.
Correct.
If you didn't change your pay and then nothing on it, you can't go above what you made in that last year.
Correct. Yeah. So if for those people that said I paid myself $1,000 a week no matter what last year, they're going to be limited. They're not going to be able to go up. But if somebody said I paid myself $750 a week, and at the end of the year I gave myself a big bonus last year, well, then I'll be okay because that's going to get into the average, and I'll be able to give myself $750 plus the bonus.
So, I guess another thing, and I don't know if you're the attorney, but I'm thinking because this could get audited, is it recommended just don't do anything fishy with your owner comp, right? Just leave it alone, wait till 2 years from now?
So here, I have no problem using this math and saying that's a fair number to pay people. And as we all know, the owners are working harder now than ever. The one thing I would be a little bit concerned about is if you were marginal on whether or not you needed the money and then you went out and gave yourself a big bonus, aren't you really asking for trouble? Because remember, there's this whole thing about the certification. You had to certify you needed this money to survive. If the day after you got the money, you doubled your pay, I think you might have a problem. So I'd be a little cautious about that.
So we did have a couple more questions
Okay.
coming through while we're on owner. Okay, so one person says, I might be confused. Do we have to pay everyone less? If we use PPP to keep all staff on board and keep them at their normal pay rate, can we still get forgiven? Correct.
Yeah, you pay them the same amount, you're fine. If you pay them less, you'll get a deduction if the less is 25% less than what they got before.
Right. I think he may have missed the point. We were talking about the owner comp.
The owner, correct.
That is related to last year's pay, not the employees.
Correct.
Right. And then the second one, the cap on owners' pay or cap on anyone making 100K.
So the cap on 100 is still 100. That hasn't changed. But again, it's going to be annualized. And so they'll be looking at a longer period, the 24,000. So while the cap hasn't gone up, you'll end up paying them more money.
So I think what they were asking basically is, let's say you had 10 employees that made over 100K.
Right.
That cap still exists.
Correct.
Right? You're not going to get forgiven on anything you gave those employees above 100.
Correct.
Then the other part that we were talking about in regards to the owner is the part that's the 46.15 of 2019.
Correct.
But that's only the owner.
That's only the owners.
Okay, got it. Okay, we're good.
More, are we good?
We're good.
Okay. So this is kind of a little chart that we kind of were trying to look at what the issues were. And again, we're looking at the ratio of payroll to non-payroll. I've assumed a $100,000 loan just to make life easy. If I spent $75,000 on payroll and $40,000 on non-payroll, my forgiveness is going to be my $75,000 I spent on payroll because that's more than 60%. And of course, I only had a $100,000 loan, so $25,000 more would have been forgiven. And then as you look at the next chart, you can see that this particular owner brought back some people, but not as many. So he didn't get to 75,000, but he got to 60, and that left him the highest amount of non-payroll costs. So the way I read that, if your demand has not picked up and you don't have the ability to bring people back, it doesn't make sense to bring them back to do nothing, because in fact, you can cover other expenses. And remember, 24 weeks could cover a fair amount of rent and utilities and other non-expenses, leases, that type of stuff. Now I put the last two groups there. One, this is what the SBA says it will do. It says if you spend 55 on payroll, they'll limit your non-payroll expense to basically 40% of the overall forgiveness. What the statute actually says is you get no forgiveness. Now, whether that gets challenged in court, what the SBA is doing or not, I don't know. I would be a little bit cautious. Again, you have 24 weeks. You should be able to get to the 60%, in my opinion. So non-payroll costs, and this is something that I love about the SBA. They try to make it as difficult to understand as humanly possible. So for payroll, it's got to be both paid and incurred. For non-payroll, it is either paid or incurred. And so this is the example I'm giving here. I get the loan April 20th. Well, obviously, I have a bill, a rent bill for April 1 through April 30th. Actually, rent would be a bad example. My landlord would be mad at me. But if it was utilities, April 1 through April 30th, I might not pay that bill till May 5th. On payroll, I couldn't go back and pick up that whole month. But on this, because it's not a payroll expense, I can pick up that entire month because I paid it during the 24 weeks. And that goes through till the very tail end. And again, I can pick up stuff that I pay afterwards as long as I prorate the expense through the date of the 24th week.
So you can't prepay anything.
Can't prepay anything, but I don't have to because it's prepaid on time. As long as I pay it on time, I'm actually getting more than 24 weeks. Yes. So again, to me, this has worked out as well as it could work out for a business owner. So this is the part that some people are going to have a little bit of heartache about. And this is just the math. They're just doing FTEs during forgiveness covered period, FTE during whatever the prior period is that you pick. If you're seasonal, you get to pick any 12 weeks, but I'm assuming you're not seasonal. Then you pick either February 15th through June 30th or January 1st through 2020, and then you run the math and say, how do I fit? And I don't think I put this in the slide here, but I think I have it on a later slide, that just, you can even play with this math as well. And then there are 4 original exceptions to this. FTE percentage, discharge for cause. We've had a couple of those recently. Refuse a written offer of rehire, and this is new. You have to document that you reported that to the State Unemployment Commission. And Chip and I were saying earlier when we were preparing, if you have an email to the employee saying, hey, come on back, full pay, full hours, and they don't respond, to me, that's good enough in terms of documentation. But you also need to get the confirming, hey, VEC, here's the list of people I've offered jobs to that refused to come back.
Yeah, and it sounded like there was two different scenarios. You're asking your old employee that you have laid off because of COVID. There's one scenario with that, and then there's another scenario. I'm just trying to find employees, and I went to VEC, and these are strangers.
So that's going to be on a different slide altogether. But so the one I'm dealing with now is the refused written offer. So that's my employee. I shut down operations. I said, please go home. I'm in dentist's office. I can't be open. I've now said, come on back. And the person says, I don't want to come back. So on that, I've got a document that I offered them their position at their regular rate of pay, and that I've reported them to the VEC so they're not sitting at home getting unemployment. Obviously, if the employee voluntarily resigns, you bring them in and they say, look, I just don't want to be here, or they want to reduce schedule, which would cause my FTE count to drop. Either of those two, they're not going to penalize for the math. Now recall again, I'm not going to get to use those dollars towards payroll dollars because I didn't pay them, but I'm not going to get penalized.
So what if an employee, and this has happened, I've talked to some other EO members that this has happened to, and I think my HR team told me this happened. We offer one of our employees to come back full-time, we need you now, which is my situation. And they say, I would be willing to come back part-time, but I don't want to lose my unemployment benefits because I like the 600 bucks. So how would you advise an employer that needs them full-time, but the employee says, nah, I only want to work 10 hours, 20 hours a week?
So I don't know how they can work 20 hours or 10 hours a week and still get unemployment, but that's a different story altogether. Okay. But from your point of view, you've offered them the job, and if they've refused, at least under the PPP, you're not going to be penalized because you're going to say, look, I've offered them the job and they've refused. And they specifically said, voluntarily request a reduced schedule, that was item D, as a reason why you wouldn't get a reduction in headcount.
But I guess the stress is on companies is we need employees. So I guess what I'm asking is, should I actually agree to hire the person at, say, 10 hours a week, even though I need them for 40, allowing them to game the system?
So I don't think you should let them game the system at all. Totally different story. But the way I break it down is, if you offer them, if they say, look, I'm not willing to take my full 40 hours, you've satisfied your FTE requirement. You haven't satisfied your payroll expense, totally different, but you're not going to get penalized there. You certainly don't want to do anything that says that you and the employer are doing something to embezzle or cheat money from the state, because that's not going to go well. So I certainly wouldn't do that. Now, whether you want to offer them a job and say, and I think we've had a couple of these, we'll offer you those 10 hours. We're not saying you're going to be eligible for unemployment, but we'll still offer you those 10 hours. And again, that's where if they want the reduced schedule, I don't have to include that loss when I do my math as a loss.
Gotcha.
I want to go to the second one. This is the thing you just talked about. 2 new exceptions came out. I think they're going to be tough for anybody to take advantage of any of these exceptions. But one is, and actually Chip might be able to do it. I had people, I let them go, they've refused to come back, and I've tried to hire similarly qualified employees for unfilled positions. Now, under the 8 weeks, you definitely meet that, Chip, 100%. But they're now saying through December. And the question is, do you really think that by December 31st, you'll be unable to find the warm bodies?
As long as the unemployment turns off, as it should, I believe people are, I'm optimistic. I think citizens feel better when they work and they have a purpose in life. And so I am really hoping that once these benefits that were necessary at a point eventually taper down, and then that allows employers that right now are struggling to bring in people, and this is not just, I'm in the human services field. So Medicaid pays us, we hire staff and deploy them out in people's houses with disabilities. All across my field, they're having trouble hiring people. I literally could hire 40 full-time people between here and Lynchburg right now, and I just can't bring them in. So yes, I believe as long as the unemployment stops, I believe we could get back to 100% of FTEs. Yes.
That's the A one. The B group, and this is totally different. This is the ones, and we hope this doesn't happen, but what if Virginia starts to see a spike and they say, we're not letting restaurants go to 100% through December? Well, if they do that, this exception would then let you ignore the reduction in FTEs that you would otherwise suffer. So again, I don't know that either of these will come through because I hope, and you hope that we get out of this sometime soon, but that's the other position there is.
Yeah. One more question, or I guess two questions. This is specifically related to what we were just talking about. If an employee has another job already and declines my offer, do I still need to report them to the Employment Commission?
I would say no. If they say they've declined because they have another offer, that doesn't kick in an unemployment issue. They've declined your offer. Because they're working, they're obviously not getting a VEC.
So you just trust that, I guess, why would they lie, right?
Yeah.
So you don't have to worry about.
You're supposed to report them, and I guess if you want to be very crossing all the T's, dotting your I's, you'd report them. But the one that I think that we're looking at is, and again, a number of employers talked to me about this, where the people said, I don't want to come back to work. I'm loving sitting at home making this money. Those are the people you have to report.
You have to. And then the next question, as the forgiveness period is now 24 weeks, aren't we now unable to do this calculation until 24 weeks is up?
So great point. No, the forgiveness period is not 24 weeks. The forgiveness period is at your option, 8 weeks, or at your option, 24 weeks. So you get to pick. And again, I would run the numbers, and if it comes out ahead for me at the 8 weeks, I would take it and get my 100% forgiveness and move on with life. If I'm at 50% or 70%, or I've got 30 or 40 or $50,000 of allowable use that I have to repay, I'd hold back off and then run 24 weeks. Now, if I run the 24 weeks, we don't know the answer to this question, but if I run the 24 weeks and for whatever reason things have gotten worse, as far as I know, you can still go back and say, run it as of 8. There's nothing that says, it says it's your option. It doesn't say when you have to elect it. Right. So I would at least run the 8 and see what happens.
Fair.
Reduction of wages, same thing. And this is again, gets the same point. It's your option, either 8 weeks or 24 weeks. And again, same thing. What if things get worse and I have to cut people's pay? I get to ignore that if I use my 8 weeks, if that happens after the 8 weeks. Again, there's no reduction if the person was making more than 100,000. There's a cure if I restore it by December 31st. And I think I should have the same cure too. Yeah.
I'm sorry. I got one more question if you're done with that slide. If we laid off employees prior to getting the loan or applying for the loan, does that count? I would say about 2 or more weeks prior to any shutdowns.
So in terms of the math, and it depends. So they get to look at these periods. So we're going back to this slide. They're looking at February 15th through June 30th, 2019 as a base period and saying, what's your head count compared to that base period? Or looking at January 1 through February 29, 2020, that may be your base period. If you let them go before February 29, that would be a lower base period than the February 15th, so that's the one you'd want to use.
So I guess at the end of the day, though, it doesn't matter when you applied for or received the PPP money. Everybody has to pick between those periods.
Yeah, unless they're seasonal and then they're 8. And then there's another version, which I meant to describe, which is you get to do one of two things. You can either say, I'm going to take the number of hours somebody worked and divide it by 40, and then come up with a math of 0.1, 0.2, whatever that is, and then add that all up and say, that's my FTE count. Or I can say, I'm going to take anybody that worked 40 or more and count that as 1, and anybody that worked less than 40, count that as 0.5. And that's something where you'd want to do the math both ways, because it may be that because of the way the hours work, you don't suffer a reduction using one of those. You can't use both, one for the prior period and one for the later period, but you can do the full analysis using the 0.5s, and then the full analysis using the 0.1s through 0.9 and the 1s, and then figure out which way you come out best. The rehires solved, as we talk about rehire, if you rehire by, and so this is the thing that I think he just touched on, if there's a reduction as of February 15th, so after that, and then you rehire, you cure that.
Right. So one more popped up real quick.
Sure.
How do you determine if money came from operating account or PPP account? We never reduced workforce, stayed busy through the 8 weeks. We actually hired employees. Will we have a challenge with forgiveness?
Yeah, I don't think you're going to have a challenge with forgiveness because you have to prove paid. And so assuming you didn't set up a separate account, you're just going to go through and track what each person was paid during the 8 weeks. And again, I'd use the payroll amount, put together my non-payroll stuff. You'll run the FTE calculations will be 100%. You'll run the reduction in pay, which will be 0, and you should come out fine.
Perfect.
So you're not required to have a separate account. We liked having it so that you can move it back and forth and demonstrate how you did it, but you should still be fine. So what are your options? And this is really kind of what we get back to. If your businesses are going to survive, you now are in the position to be able to pay 24 months of rent, utilities, all things that, well, utilities probably not, but rent or things that you may have personally guaranteed. And if you're going to close your doors, you know, I hope none of us are in that position, but if you are, that's probably the wisest thing to do. Remember, the loan was not personally guaranteed. There is no collateral for the loan. If you just don't pay it back, your bank goes back to the SBA. The SBA pays the bank back in full, and that's the way life is.
Just stay within the allowables.
Stay within the allowable use. Yeah, don't spend on a boat. Don't spend on a car.
Or other obligations, because maybe you had a tech company make you software and you owe them $10,000. Don't use the SBA, the PPP to pay them off. Just your rent and make your employees whole and your utility bills.
Correct. Yeah, but my point would be, don't be bringing back employees if you think you're going to shut down anything.
Right.
So then, secondly, if you think, and some of us, when we looked at that V curve, either they stayed flat or at a V, for those folks, then definitely you want to maximize your spending on payroll. So why would you want to cut back on pay if you think you're going to go forward? You wouldn't. You'd spend as much as you could on payroll. The federal government's giving you all this money, and we didn't talk about this. The money they're giving you is technically speaking not taxable, but it is. And so I say that is, it's not taxable, but when you do your taxes, you don't get deducted. So it's not a free gift. It is a gift with a little bit of a string. But still, if you have to be ready for demand to pick up, you want to keep that staff in place.
So, okay, so I was reading another question, and then I was like, God, I need to be listening to what you're actually saying. Because this came up yesterday, I think, with our accounting team. So the PPP money is not considered taxable income for your business.
Correct.
Correct. The things that are allowable expenses that I'm bouncing off, I'm eating away at that PPP money with, normally would have been expensed.
Correct.
And so are they allowed to be expensed, or are those expenses no longer?
So it's confusing. If the loan is forgiven, you will not be able to deduct that expense as a business expense.
So the expenses that you ate away at that money with, those expenses are not deductible if it's forgiven.
If it's forgiven, right.
But since if it's a loan, it's just like as if I went and got a loan at the bank.
Yeah.
I can expense it because it wasn't free money. It was it was borrowed money for operations.
Right.
Okay, good. Thank you so much for answering.
So the net effect is, and I went through David Bastion's in my office, who's a LLM and has a CPA and all that stuff. The net effect is it's the same as if you got taxed on this money.
Yeah.
For the most part.
Okay, a couple more questions just came in.
Okay.
Okay, so I think I know the answer to this, but does the PPP include commission salespeople that are 1099?
1099 independent contractors are not treated as employees, so that's not something you got the loan on, and it's not going to be something you get to expense.
And you should not use the PPP to pay independent contractors because it's not allowable.
Exactly correct.
Okay, and then the next one, I have been told my CPA that PPP expenses are not allowed as a deduction as your business expenses. Yeah, if your PPP loan is forgiven. Yeah, so same answer you gave. Yeah, perfect. Okay, we're clear.
Yeah, it's the same. Again, to me, you're not being taxed on the loan, but the net effect is very, very similar as if they were, that you're not going to get deducted. So we're looking at, here are the things to think about. One is you're going to shut down the doors. Here's what I do with the money. The other option is I'm going to thrive. I'm going to survive and thrive. I just want to spend it all on payroll. Keep as many people as I can, even if I don't have work for them, because it's free money in essence. It's going to survive, but I become more lean. And that's, you know, a number of my clients have told me that they think they're actually going to come out better. And I hope a lot of people on this webinar will come out better, that they've restructured. And I've had a couple of calls of people saying, hey, it's really painful, but we're going back and looking at how we do our things, reorganizing our processes, reorganizing our paperwork, reorganizing how we do our business. There's no doubt that more and more people are using Zoom and changing the way they deliver their services. As a result of all that, we think we're going to come out ahead. So for those people, I would bring back my employees, of course, pay them as well as I can, pay them bonuses, that's what you have to do. Landlords, I haven't heard anything about them recently. I know in the first couple of months, landlords, and I was on calls with landlords where they were basically saying, I'm going to forgive the rent or abate the rent or defer the rent, and being as flexible as they possibly could be. So I would just be trying to make sure I use that money to put my business in the best position to succeed on the outside. Do I pick 8 weeks or 24 weeks? Again, for those of us that we looked, I think it was almost half of this group didn't suffer a drop. Run the math. The money you got should have been about 10.3 weeks of your payroll. So if your payroll stayed the same, that's 8 weeks. If you put the non-payroll on there, you should be at 100%. If you didn't lose anybody, there's no FTE reduction, there's no reduction in pay. Go ahead, get that forgiven, move on with life. If there's a second wave that comes through, there may be another loan program for all I know, but you've gotten this one done. Secondly, if your payroll costs were less than 6% of the loan amount in the 8 weeks, you definitely want to opt for that 24 weeks. While the SBA has said they will issue some sort of guidelines to tell you that you don't have to meet the 60% as a cliff, they haven't done it yet, and I certainly wouldn't want to get caught up in that. I said wait 20 weeks. So what I would do is I'd wait about 20 weeks and run the math, see which way I'm coming. Any more questions, Chip? We talked about trying to make this 45 minutes.
Yeah, we're clear so far. Is that your last slide?
That's my last slide. Should be.
So one popped up that occurred to me. So a couple things. One is in the news. We heard about companies. I think Ruth Chris was one of them.
Correct.
They took the money. They all of a sudden they got mud on their face and they had to pay it back, or they chose to pay it back. But they followed the rules. Looked bad. They gave it back. Right. So when those of us that did this filled out the app, it was fairly early in this whole COVID thing, and one of the things was we think we're going to need it. But in some situations, companies thought they needed it, applied for it, got it, but maybe they're flat. They thought they were going off a cliff like everybody else, but they're flat. So I guess a couple questions. One is, if you got it thinking you needed it and then you didn't need it, is there anything we should be concerned about? And the second question would be, is there any situation in which you would recommend a company pay it back now and don't even fight?
So, do not. It'd be a very rare situation if you had to pay it back. What I've been suggesting to my clients when the SBA came out with that guidance is to do basically two things. Have a memo that you keep in your file that does an analysis of best case, average case, worst case COVID impact. And then at the same time, have someone go through and say, hey, what are the financial impacts to our business for best case, average case, worst case, in terms of will we have enough financing to keep our business alive? I think it's extremely difficult for the government to be able to prove that that would not be an analysis that showed you needed the money. Because when you did that analysis, and what I've suggested to do is keep track of and put in a file current articles that you find. There was an article in the Virginia Business, I think, that said 50-some-odd% of business owners in our community felt that COVID would last at least a year. Well, if it's going to last a year, how could you possibly say, I didn't think I needed the money? Right. So save all that stuff contemporaneously in a place. Again, I'd be hard-pressed understanding how you'd think it wouldn't impact you.
Here's another example, and this may be specific to my field, but there may be some people on the call that are in a similar situation. State of Virginia was a little slower than the PPP, but they did, we had to close down our day support facilities. And eventually Virginia Medicaid said, oh, we're going to give providers retainer payments to help them pay for the building and the vans and maybe some staff so that we actually have a day support in 6 months, 8 months, whenever this thing blows over. Because if they didn't do that, those companies go out of business. So that happened after we got PPP money. To see what I'm saying? So one minute I thought, oh my God, I'm going over the cliff. The next with retainer payments, this is kind of nice. So I guess if somebody on the call is going to, I mean, there's the COVID winners, I guess is what I'm getting at. Is there any situation in which a different source of funding came in, replaced what you had, you don't really need the PPP loan? Is there, if a client was in that situation, would you recommend them do anything different than what we're currently doing?
Again, I can't imagine a situation which, and this is why I think it's important to keep some sort of contemporaneous documentation of it, because they come out and say, oh, there's this great advance in the COVID fight. Look, the stock market 2 days ago was up, whatever it is, 10%. And the next day it crashed because they said, oh yeah, it wasn't what we thought it was. And I think that's going to be the issue for everybody. Well, yes, Virginia gave me some money, but how did I know we're not going to go through a second wave? How did I know we're not going to go through a third wave? And this is the only money I have, and I think it's going to have to cover me into 2021. So yeah, I think you'd be hard pressed to come up with a reason why you had to give back the money.
Yeah. Okay, got a couple more questions on here.
Okay.
Let's see. If you choose the 24 weeks, do you lose a percentage of the forgiveness?
No, absolutely not.
Okay.
It's the same math, all the same things done. The only difference is they're using you 24 weeks versus 8. And as we pointed out, the only risk you run is what if you've lost people in that 24 weeks to have you rehired. If you haven't rehired during the 24 weeks, you're going to get penalized.
Right. But like you recommended, at the end of this whole thing, do the math on both, and whichever one works best, that's what you would go to.
Yeah, I would do it right before, because remember, you have that rehire option, and you may end up being at week 20 and saying, look, if I do the 8 weeks, I'm at 72% forgiveness. If I do the 20 weeks, I'm at 79%. But if I hire back 5 more people, that'll put me to 100% in my 24 weeks. I'll do that now.
Yep, very cool.
Assume I can find them.
Right, exactly. Can PPP funds be applied to a new equipment? If not, can it be applied to loan payments on the new equipment over the 24-week time frame?
And I would say absolutely not. Not an allowable use.
This equipment was non-allowable. It was specific to rent, utilities.
If you had leased the equipment, you would have been okay.
So, there's a couple other. Okay, so if everybody on the call don't mind, try to do your questions in the Q&A box, because I haven't been looking at the chat. But there is a couple things came through in the chat. Michael Baloney from Richmond said, good job, guys. So thank you, Michael, for joining us. He's at the EO chapter in Richmond and one of the founders and got them started. So I'm very excited to see him on the call. Let's see. How is PPP forgiveness impacted by taking the EIDL or local grants?
So the only overlap is if you got that $10,000 grant or advance, that gets subtracted from your forgiveness. You're not going to get both.
And it wasn't 10,000. It was $1,000 per employee. Some people got 2,000, 5,000. Max was 10.
Yeah, correct.
So if I got 100,000 at PPP and I got the EADL, I'm only going to have the 100,000 minus the 10 forgiven.
Correct.
Yep, got it. Okay, that's good. Okay, another one. We talked a little bit about this on the last call, but I think this is an area of ambiguity in which we would like to have some clarity. It says transportation. Now, transportation.
I'm not answering that question.
You're not answering that question?
I have no idea. I know what they're going to ask, right? They're going to say, does this include
mileage?
Mileage?
Right?
I think it's mileage. Go ahead.
So there's mileage. Okay. So if I lease a car for my sales force that are driving around,
I would say yes, but I don't know.
If I bought a car using a loan from the bank, probably not. That's an asset.
The principal payments are never going to be forgivable ever. Right. So the interest payments would be an allowable use if it was in existence prior to. Whether you count that as transportation, that I don't know. I think you'd have a good shot at that. And people have asked a lot about cell phones. Will cell phones be included? Right. We just don't know.
I guess the hope is most of us are going to eat up the money using the rent and the payroll because we have the extended period.
I would say 24 weeks, you'd be hard pressed not using it in payroll.
So I guess the recommendation would be use it for the payroll and the rent because that's obviously going to get forgiven. If you have a problem eating it up with those things, then start dabbling around in transportation and utilities and things like that.
I couldn't have said it better myself.
Okay, very, very good. Let me see. Okay. That is, I think we are clear on our questions.
And we're
right at 2:49, so we hit that. So I guess okay, so if anybody wants a question, you better do it now. We're going to close this thing down. It is being recorded, so we're going to, it'll take me a little bit to render it, and then we're going to throw it up on the EO Southeastern Virginia Facebook page, and I think we also have a YouTube page.
And yeah, do you want to tell us a little bit about how to apply to be a member of EO?
Yeah, I would go, if you just Google Entrepreneurs Organization, it should pop up. We're the only game in town. Also, you can see up here the EO, that logo is what you'll see. So what EO is about is helping entrepreneurs just learn and grow. This is not a B&I organization. We're not trying to do sales with each other. This is truly just helping the entrepreneur, not a hired CEO. There's one thing that's different about EO than most other organizations. This is the owner, the managing owner, the person in there doing the day-to-day in the company, signing the front of the paychecks as they kid around, even though none of us do that anymore. It is for a little bit larger organizations, the entry level EO member would need to be at least at $1 million of gross revenue and up. So this is not a startup organization. It is for pretty mature companies to take it to that next level. Like, how do we get you to 10 million or 100 million? We do also have an accelerator program for companies that are at the 250 gross revenue. The goal of the accelerator program is within 2 years, we can get you, using all of the EO resources and the EO members as mentors, we can get companies, entrepreneurs, from 250 to $1 million within 2 years if they follow the curriculum. It's excellent curriculum designed by Vern Harness, who wrote the Rockefeller Habits and a book called Scaling Up. It's a worldwide curriculum called made by Gazelles called Scaling Up, and it's really good. Highly suggest people even reading the book if you haven't read it yet. But if you're interested in either of these, just head to the EO Facebook page. My email address is chip@ssvainc.org. If anybody's interested in learning more, I'm happy to answer emails and get you directed to our membership chair or the accelerator program. So that's a little bit about EO. Thank you for allowing me to do the plug on your webinar.
Well, Chip, thanks so much for putting this together.
Yeah. Oh, one more question came through and then we'll go. Okay.
Good.
How about owners who aren't on payroll but take draws? That's actually a really good question.
Okay. So what happened? What did we do in 2019? In 2019, you may have taken draws, but at some point you would have had to make some of that pay. And if you did, that's going to be the same math we use: is what did you get paid? Again, they're not looking week by week. What did you make? What did they make over the course of the year? So as long as you paid yourself something as pay, then you should be okay.
And I'm assuming this is an S corp or an S corp, because the owner draw is not comp, right? It's just taking money from one pocket and putting it in the other. I think, and you're the labor guy, but the entrepreneurs should not pay themselves minimum wage, meanwhile take $100,000 worth of draws. That's probably not a good idea. Is that accurate?
Doesn't work out. But it's not uncommon to see is draws throughout the year. At the end of the year, the accountant comes back and says, by the way, your pay was, and then we treat that as pay.
Right. That way you're doing the correct withholdings and paying your taxes and all that kind of stuff. But the draws are not considered part of the 100,000 in comp unless your accountant said it has to be.
Correct.
Is that fair? Okay. Very cool. Okay, Barry, thank you so much.
Thanks again, Jeff.
Big help. And I'll have this rendered and up for everybody to watch, or if they missed it or want to share it. So thanks so much. Have a great day, everybody.